Welcome to Community CPA's Townhall Meeting. Thank you for joining in, and we hope you're all doing well today. Today is Community CPA's Town Hall. So our objective is really to hear from you and connect and to address some of your concerns regarding the topic for today, which is going to be on business deductions. So we're going to go through all that you can deduct in business, or as much as we can cover in this time. And Ying will go through some of the ones that are more difficult or that you might have questions with. So during this time, feel free to express your thoughts and concerns regarding deductions. If you have any questions, please feel free to come in chat. People right now. So yes, in terms of format, this is obviously different than our normal webinar, where our whole team puts and prepares a formal presentation. In this one, we have a more open agenda, so you are welcome to, as I said, bring your questions. The next town hall meeting is slated for Saturday, March 13th. So we will have one every month. Here today with us is our expert today is Ying Sa. Many of you already know her or have met her. She is the CEO and managing partner for Community CPA. She's had accounting experience in both the US and Canada, and she is an advocate for taxpayers, currently serving on the National Taxpayer Advisory Panel, an advisory committee to the IRS. She has published her first book, Appointment with Ying, at 8 a.m. And is currently working on her 10 a.m. book, which will be focusing on growing your business and developing that. So as I said previously, if you have a comment and want to talk, you can raise your hand and we will unmute you to let you in. Hold on, I'm admitting more people right now. So disclaimer, as always, we want to if you are not talking right now. Disclaimer, these things that we're providing here for you today are general, so they might not always apply directly to your business and situation. So of course, take the information here with a grain of salt. And we know, especially with things around COVID, that the situation is constantly evolving. So please consult your advisors on matters pertaining to business and finance. So we want to get into the core of the conversation today. We have an hour. So we'll be talking to Ying about business deductions. So Ying, do you have any comments before we begin, or should we jump right in?
Just a couple of logistics things. And when you are not talking, make sure you mute, because otherwise other people hear your background. And Kat, can you explain to folks that do they have to unmute themselves when they ask questions, or you have to unmute them?
They can unmute themselves, okay. But if you can, please raise your hand to signal that you would like to talk, and we'll call on you so that you can unmute yourself. All right.
So the way to raise your hand, and Kat, can you explain how would they raise their hand? We had quite a few participants.
Yes. So if you go to your participant panel, it should open a box to your right-hand side, and they should be able to.
I was trying to do that, and I didn't really get that done.
Oh no.
Where would they be raising their hand?
Participants.
Yeah, I'm in participants.
And on the right side, below the end of the right side, there's invite, mute me, and raise.
And raise hand. I think we're different, Ying, because we're admin, we're the hosts. So
I see. So everybody knows how to do that, right? So, definitely we already have a couple of most frequent asked questions ready already. So we will go through these questions, and yes, please bring your question in, and you can also put your question on the chat box. Did you see that? And right here on the chat box, and you can put in your questions. So our objective today is to answer all the deduction related questions. And assume that we're talking about businesses here. Anything that you are thinking, oh, I'm not gonna ask my tax preparer this question because they think I'm crazy and this probably not deductible. Anything you think is probably not deductible, I think we should just talk about it. And I sent out the Facebook post today. So I put Steve, my husband's picture with the puppies, that our puppy's name is Peanut. Okay. So trust me, I am a professional person in terms of taxes, that right. So I sometimes ask myself, should I deduct the puppy expenses out of the business? I'll give you an argument why I think it might be reasonable. And I also going to tell you that why it is not reasonable. And then I'll give you my decision on that. So our puppy is so cute and is 100% relying on us. If I don't feed him, he'll die. So he's like my dependent, okay? And he bring happiness to me so I can work. And without him, and I will be like so down, I may not even want to work. So in that argument, I say that, well, it's not only necessary, and it's also reasonable for me to deduct the puppies out of my business. And so that's one argument, okay? But in reality, I did not deduct the puppy's expenses out of the business because, hear me, because the people who actually deduct puppy expenses out of their business are the grooming business, are the businesses like a pet store, smart pet, those retail business. They're in puppy business. So they deduct puppy expenses out of their business. And I'm also not in a business that using animal as a tool to heal people. There are also counselors and people who help with depressions. Those are the people, they have an animal in their clinic to help patients to feel better, right? So those are people who would deduct puppy expenses out of their business. So thinking of the examples of who can deduct and looking at what I do, I think is a very big stretch for me to say that it's so necessary. Otherwise, I'm totally disabled and I cannot work. Maybe I should go to see psychiatrist, and maybe I should be covered under the medical expenses instead of deducting the puppy expense, right? So the conclusion is it is not reasonable to deduct puppy expenses out of community CPA companies' expense, right? So that's kind of the dialogue. This is the level of dialogue we want to conduct. And so bring on what questions you have. And it's town hall meeting. You know what town hall meeting means? Like everybody talking at the same time and the question get answered. But we're in this pandemic time, so we're all virtually connected. But still, and we want to accomplish that effect. So you hear me, and I know, come on, you guys are so shy. You don't even show your face. So, we want to know who you are, and you ask questions and we answer. Okay. So let's get started. What do you think, Kat?
Sounds good. Yes, I did request for some of you to start your cameras. Feel free to, if you are comfortable with that. And we're always happy to see faces. So yes. So Ying, let's talk generally first. Can you tell us a bit about any guidelines or rules of thumb when it comes to deductions in business?
Absolutely. So I would say that in the very logic way, you want to, number one, decide that you have a business. So in IRS's book, you don't have a hobby, you have a business, because hobby is not a business, even though you are doing it. Say if you have a horse ranch, but you're not doing any breedings, you're not doing any competitions, you're just having a horse ranch, and that could be your hobby, right? So maybe the feed and the things you do with your horses is not deductible. Just like very much like I have Peanut and I cannot deduct things with Peanut, right? So number one, decide that you have a business. Then you probably ask me, what is the best way to decide I do have a business? The best way to know you have a business is number one, you registered with the government. You have that registration done with the state. You actually have a different EIN number, not your social security number. And even if you use your social security number, but you obtained a DBA name with the state. So registration with the state is number one, you have a business. Then number two, you want to make sure that the deduction you're gonna have is reasonable. Literally the term IRS uses is reasonable and then necessary. So it's okay if you have expenses you deduct, the auditor come around goes, well, no, Grant, you can't deduct that, and I don't agree with that. It's okay, because reasonable and necessary is not even something measured with a number. It is so subjective, right? And anything we can say is reasonable and anything we can say is necessary. So it is really you take the step that to know that is reasonable, that is necessary. So business owner and your tax people would help you to determine that. So for, I'll give you a real life experience. And many years ago, and don't know how many years ago, we have a client and who are in auto repair business. And they regularly have this diaper expenses out of their auto repair shop. Diapers are expensive. They're like $20 a pack. I mean, you could, have $100 a month kind of expense. So, absolutely on the surface, it looks very unreasonable, unnecessary for a auto repair shop. Don't you agree with me? And that's just obvious. If I'm the auditors, I come in to audit your book and your auto repair shop, you give me diaper expense, I would disallow that. But digging into more, what we realize is that this auto repair shop and the way they're doing things is they make clients wait. They don't have a parking lot to take the car side to side, and then you go home and you come back to pick up the car. They don't have that facility. They are the in and out kind of auto shop. And each repair takes about 2-3 hours. So their client literally in the shop waiting. A lot of times the clients are actually the people coming with family. The baby want diapers, the kid want food. So not only they have diapers in there, they also have food in there because that's just how they operate. They don't keep the car on the parking lot. So with that, and a lot of kitchen expense, diaper expense become necessary because that's the business model they run. So that's kind of one example I would give you. So answer your question. What is the overarching concept of business expense? Number one, you have a business. Number two is reasonable and necessary. Sometimes you accomplish reasonable and necessary by understanding the business model a little bit more. Then it will become that way. So don't look at the surface goes, I'm sure it is wrong. No, may not. That's what the good auditors from IRS, they will hear your story first. They don't even look at your expense. They want to interview you. They want to know how you run your business. And if you say, well, my office is closed. My office is in the building closed at 5 o'clock. So I always have to do my work at home. And I work with China a lot. So it is always in the evening. It's not even during the day. So the auditor hear you telling the story of that. In their mind, they already know your long distance calls may be necessary and your home office expense definitely necessary. And so, those are the prep work. When you get audited, they want to know your lifestyle first. They want to hear you saying things. So you may say, well, for my business, I have to travel to Hawaii every year because there is an important business conference happens there. I take my whole family over. I do my business, and the family enjoys the summer, enjoys the weather there. And so that become a thing. The auditor will know, okay, it's reasonable. You have expenses in Hawaii. It's necessary because it's important to you, but then they also know that your family went, so they may want to split your expenses, part for personal, part for business, or whatever, right? So again, and that would be the overarching general summary of business expenses.
Thank you, Ying. So what I'm hearing from you is that there are different ways that businesses operate that can qualify for these deductions just based on their business model. But can you tell us a bit about what are the typical deductions? Let's start there, and then we'll go to more maybe special cases.
Sure. So for any business, typical deductions is the cost of doing business, right? For restaurant business, obviously, it's cost of goods sold. And for professional service companies like our company, and obviously, payroll would be a big one, and your office facilities and your software cost, all of that is the business expense. And it's really kind of catered again in what kind of business you do. And we also have people who doesn't really have a brick and mortar kind of business. And what they do is they are doing investment. They are doing day trading at home. And really, it seems like they don't really have a business, but they do have a business. And in that case, your business expense would be very minimal. And most of your expenses is actually your investment and your home internet and whatever your desk expense and stuff like that. So not every business has a lot of expenses. We literally have people making millions. Expenses is so little. It's like everything is profit. So it is the cost of doing business is your expense, big or small. As small as Starbucks coffee, as big as a couple $1 million building. So these are all your business expenses.
All right, Ying, so let's go through some scenarios. One, I think a lot of people still have concerns over COVID. So can I deduct COVID vaccinations, trips to the doctor perhaps, or the time the employees have to take off because they're sick?
Very good question. The vaccination going to come to us in two formats, okay, folks. And one is going to be covered by your insurance. So it will be arranged, you'll be told when to go to do that. And, most of the hospitals, doctors and nurses already received their vaccine. So they're being arranged at work and is covered. So there's no cost to them. And there will be another group of people who doesn't have insurance and not kind of belongs to the necessity worker kind of field. So the government has no way to track you. So you are kind of outside of this necessity group. Then you will be paying. You may want to get vaccinated and you'll go to Walgreens, say, hey, can I get on your list? Walgreens will sell those vaccines to you and then you can get the injection. So if you take that vaccine, if you have a business, you take that vaccine, and that I considered, there's no IRS rulings out there for us, but that is reasonable and necessary, especially if I just consider my office. Right now, everybody wants to do taxes. They're coming into our office, and our folks are not really vaccinated because we're not necessity workers, and by definition. So those, if people go out to get a vaccine, and I think it's business expense, we should reimburse our staff and the business should deduct that, right? And in terms of your staff, if you have people who are sick from COVID, they're out of work, they can't work for you, but the government right now allow the employer to pay for their sick time. When you apply when you pay the 940 taxes, when you do payroll, you do the 941 tax return, make sure you mention that to the people who process your payroll, because that payroll you paid in for the sick employee need to fill up another form they need to sign to say that, yes, I was sick, yes, I didn't work, yes, my employer paid me. And once that is done, you get that money back from your 941. Okay, so in the way, it is your business expense, but you get paid back for the payroll that you paid to the sick employees. And the vaccine, yes, business expense. How could that not be? Otherwise, people cannot work.
Correct. So I think that's great clarification, Ying. And then as far as like supplies for cleaning and PPE equipment, are those also?
They are deductible. So if you provide face masks for your staff, for your for clients who walk in, and those expenses is deductible. Not only it is deductible, if you have a PPP, your PPP dollars can pay for that.
Okay, excellent. So onto a different topic. If you buy like furniture or equipment for your office, should that be a deduction or is that a depreciation purchase?
So I know this word of depreciation is very confusing. So you hear a lot of talk about, oh, that's depreciable and that's deductible. What exactly that mean? Sometimes depreciable and deductible is the same. The time they are the same is when there is a tax special ruling to allow business people to deduct asset fast. For example, if we, and our office is working on a renovation project for the front door. Okay, I know we haven't really seen that, but we already planned to get that done, but the equipment came in late. So anyway, that front door project say cost us $60,000. And this one is depreciable because the door is going to last for a long time, right? So it really should be depreciated, means should be expensed in 10 years time. So every year we should deduct 6,000 because it's 60,000, right? So 10 years should be 6,000 a year for 10 years as expense. That's what we call the depreciable. So it's depreciable for 10 years. But there's a special ruling come out saying that we can write it off in 1 year. So it's become a deduction. So now deductible and the depreciable become the same. So our $60,000 door project can become expense in 1 year. But that is because there's a special ruling on there. And so depreciable, deductible sometimes is the same. And most of the time, depreciable number is less than deductible number because depreciation do reduce the $60,000 door. If we depreciate that for 10 years, every year the deductible is only what? 6,000, right? So depreciable asset, it always should have a less amount than deductible because if you deduct it, the whole thing is out. But there's still asset. There's still asset on your book, just that you write it off in 1 year. So deduction on asset happens, but may not be equal. I know it is. I feel like the more I explain, the more confused people would get. But I think the spirit of it is that just keep in mind when you have something you bought gonna last for more than 1 year, that really is asset. They're really asset. But that doesn't mean you have to depreciate it because it's asset. Because some asset by government standards, you just write it off. So you want to ask your tax person, A, what's the standards right now? Because seriously, every time we change the presidency, the tax things changes too. And it is just a tool for the president, for the White House to change the economy, to change the efforts of the emphasis of the economy. So they have a different ways to express it. And, President Trump expressed it through Job Act. And, President Biden will express it with a different act. So it will all come in, and every president has a way to express their interest. CARES Act is a very unique because we have pandemic, so we see CARES Act. If there's no pandemic, there will just be the Job Act for President Trump. Then another president coming in will be another act. So that's just how it works. And ask your tax professional, ask community CPA. I tell people that the president can change, okay? They only last 4 years, or the most is 8 years, but community CPA, we don't. We're always here. So you always can rely on us. It doesn't matter how many times the president changes. It's almost irrelevant because we know how to work with the tax regulations to make sure that you are always taking the most advantage you are entitled to take. So we don't pay taxes. We don't pay unnecessary taxes, which we also say that we don't pay tips. IRS don't need your tips. They're always doing a good job. Why do they need tips, right?
Ying, when you're talking about assets, do remodeling costs count as that? Or somebody says such as flooring, papering, are those depreciable or deducted?
Okay, so for 2020 tax return, when you have flooring modeling done in 2020, it is 100% deductible. It will still be your asset, so your accountant will still put that as an asset, but depreciation will be equal. The amount you bring to deduct is equaling to your flooring cost and your papering. And I'm not sure about what means papering, but maybe it's related to renovation. So all the renovation, everything, your interior design and your TV and your furniture, anything that made your business go inside, that's deductible 100%. That is in the CARES Act. So yes. So I saw another question saying that as a day trader, if my partner is working, but he as to what while I'm doing day trading, can that be written off as a deductible? Oh, okay. That's I know what you're asking. You're saying that you are working, but your partner or somebody else is watching the kid as a cost to watch the kid, right? So you're actually paying someone to keep you free so you can actually work. And if you are paying that cost out of your company, so that means that you are kind of paying like an employee or a subcontractor, and for the work you need them to do so you can be free, then you can work. That is a business expense. But if you are saying that, well, this daycare is a business expense because I need to put the kids in the daycare, then that business expense is also going to, that business expense is expressed as the benefit for you. Okay, let me repeat that. So let's say you make $2,000 payroll income and the company pays $1,000 for your daycare expense. Then your total payroll is $3,000. So in the way it is deducted, right? Because your business deduct $3,000. $2,000 is your payroll, $1,000 is the daycare. And that $3,000 become business expense. But when you go back home to do your personal tax return, and that $3,000 shows up on your W-2 as your income. So it is deducted, but it is expressed as an income for you personally, unlike the flooring cost we're talking about, they do not get expressed into your own income. It got expressed to the flooring company's income. Does that make sense? So almost you have to think in this way. Every time you deduct something out of your business, you reduce your business income for some expense. That expense is somebody else's income. It is either the flooring people's income, or maybe my babysitter's income, or maybe is community CPA's income, but it is my expense. So you always need to express that expense out to somebody's income. But in this case, for the daycare, for yourself, for your own baby, so you can work, that is expressed into yourself.
Awesome. So we have another question from the audience. My 21-year-old son collected unemployment benefits over the summer, but now is being told that he has to pay them back. So he does have to file taxes to report them this year, but the next year when he pays them back, will he get the refund since he didn't get to keep it?
Okay. This one, I would want to find out why he was told to pay it back. Okay, so there's a couple of reasons when you receive the unemployment benefit, they ask you to pay it back. Number one could be that when he applied for unemployment benefit and he was reporting that he worked somewhere, but that employer did not file him as an employee. So the state couldn't tie his benefit to the employer's account. So that could be number one reason. Number two reason that when he applied for unemployment benefit, he was applying for the federal portion of unemployment benefit. I think it's called PUC. And that one says that I am self-employed and I don't have work, so I want to get unemployment income. And in that case, if he got rejected, maybe his tax return did not reflect that he was self-employed. Okay, so the state is very methodical in terms of who gets what benefit. So they look at certain records that they can find out. And if you don't have that record, they think that you are doing the claim incorrectly. If that is the case, the state actually should issue you an amendment. I would not recommend you to file tax return based on what he got for unemployment benefit, and then hoping that next year you reverse it. No such a thing. No such a thing. You want to make sure that it is getting corrected in the year that is getting paid. So that's the easiest way to do. So don't mess up your personal tax return, and you're 21 years old, so young, already have complications. No, don't let that happen. And make sure that you work with the state, get that resolved for 2020, okay?
Sorry, so going back on deductions, are meals provided to all employees deductible, even if the person is the only employee?
If you are the only employee and you eat meals, that is not deductible. Very, very clear, okay? But if you are like in our firm, and if our folks got busy and we spend money bought lunch for everybody, let's say, okay? And that is according to the Job Act. Job Act changed this, okay? The Job Act says I can only deduct 50%. So let's say I did a catering for $300 for the office. Then on community CPA's book, we can only deduct 150. The other 150 cannot be deducted, it's just lost in the space. Okay, so, but if you are just yourself, be sure to know that you don't want any meals even showing up on your tax return. And they are not there for that. And then you may saying that, well, what if I traveled, I was away from home and I don't really, it is a business trip. Of course, if it is business trip, not only your meals and your hotels, and it's deductible. And you can also use per diem to reimburse yourself. So those are the ones that you get reimbursed from the business. For example, if I go to China to do business, which I never do, but just in case I went, and then I will reimburse myself per diem, because so stupid if I try to calculate every receipt with the conversion rate is so much trouble. So I would just go by the government per diem requirement. I don't remember how much that is. I think it's $135 a day, US dollar a day. So I will just search for that per diem rate. Then I will just time how many days I was in China. Then I will just request community CPA pay me back this money. And then community CPA write a check to Ying, and I deposit that in my personal bank account. That is not a taxable income for me because it is a reimbursement, right? Then community CPA has a business expense that is deducted out of the income. So that's how that works.
Thanks, Ying. So let's talk about home offices. If you have a home office and you're doing renovations or decor or improvement on your house, can you deduct those expenses?
If you can deduct those expenses, if the stuff you did, it is exclusively for business. So let's say you build, we actually have a client, she was a mental, what do you call those counselors for wellness, for the mental illness. So she was working with the employer and for many, many years. Then now she started her own practice. So instead of renting a place, because she has a really good place, her house is right in the district of the business, and it's so easy for clients to come in. So what she did is she turned half of her house into that clinic. So she fixed her driveway so it would go to that office directly. And so that's deductible because that's really for the patient to come in to park. And she fixed her house for that special area and make it more patient friendly. And she has a resting room, and she also have a treatment room, and she made the place, color the place based on, because her specialty was actually for workforce, for young adult, professional young adult mental counseling. So she fixed her room more in the trend with young adult. And so she also had got a puppy to come in to be the therapy dog. So all of these things, the decoration, the change of interior, and to make the ceiling higher so that it's more open, all of that is becoming part of the clinic properties. So yes, it's all deductible. But of course, if you did interior for your own bedroom, that is not deductible because it's a personal expense for your home. So you want to really separate them.
Awesome. That's a great answer, Ying. So when we're thinking about labor costs, like for these remodelings, or if you have contractors, any services that you're getting, are any of those ever deductible? Salaries, those type of things?
So I think this question meant to say that if I am the general contractor and I hire those subcontractors to come in to do those remodelings and stuff like that, whether that is okay to deduct it. The answer is yes. It's for your business office, so of course it's deductible. And because of the CARES Act, it actually can write off 100%. You don't have to depreciate that, but make sure that when you hire subcontractors, and you do need to have that contract in place, right? The contract need to be between the subcontractor and your business, right? Because that would be, the IRS would say that, well, show me that it is a business expense. One of the proof is that the contract is between the contractors and your business. And then of course you want to get hold of the subcontractors information on W-9, right? So you want every subcontractor to sign that agreement to fill in the W-9. So you have their information to issue 1099 NEC. Remember in 2020, it's no longer 1099, 10 miscellaneous, it's 1099 NEC. So you want to have those information so you can issue 1099. Folks, if you don't issue 1099, IRS has a right to deny your deduction because you didn't have a proper, you didn't follow proper procedures. So make sure you have the 1099, then you can deduct it. Okay. Yeah, that would be the labor paid for remodeling. Yes, they are deductible and they're deducting in full.
Awesome, thanks. So if your business isn't based around childcare, are all expenses for childcare, are those all considered individual expenses and not deductible for business, or are there certain situations where you can deduct for that sort of thing?
So let's first clear about the definition of childcare. You know, some people say that, well, I'm staying home mom. My friend, they went to something, so they leave their kids here. Is that a childcare? Okay, so one of the key, you know, I actually get involved with the audit case many years ago, and this lady was just doing, it was just almost like doing everybody a favor. So there's several kids here and there, and so she filed a 1040 with a Schedule C and saying that she has a child care. So the IRS say that, no, that's not childcare. You cannot deduct all these expenses. You're just doing a little favor here and there. You're not serious with that business. They don't think, you know, IRS don't think she has a childcare business. So it boiled down to the fact that whether you licensed your place to be a childcare place. If you are really serious to do a childcare business, you would already got the license from your state to say that your home is okay to do childcare. So there's kids coming in, and so you're doing a business. Okay. So in this particular case, is actually the client who came to us would not be viewed as childcare business because they never got, they don't have a license. They were just doing it out of almost like a hobby like. So it was denied of the deduction because of that. Of course, we pushed forward, went into appeals and saying that, yes, they do, but they didn't know that they're supposed to be licensed by the state. And so, you know, it's proven that it's a real business, but it just didn't get licensed by the state. And learning from that, I want to say to the people who are listening that if you are in the childcare business, you can deduct all the expenses related to the children, the cheese stick, your snack, your food. Why not? I mean, the kids eat those, right? And you can deduct the toys, you know, the bathroom toiletry and everything that really, you know, they look so personal. Those are all personal expenses. Suddenly it's all deductible. Yes, they are deductible. But you want to make sure that the childcare business is legit. So you registered at the state, you applied for the license, and then you are going on with your childcare business. So I would say that it is very difficult for an auditor to come in to say that, well, that diaper expense doesn't belong to the kids, doesn't belong to the childcare because you guys use that yourself too. So that would be a very I don't think the auditor would even go there. If you have your license, you have your childcare operation, and you have those seemingly personal expenses, which is a nature of childcare expense, then yes, it is deductible.
All right. So let's say my business was hit by one of the big storms that came through, and there were some property losses that my insurance company didn't completely cover. Can I deduct the rest?
If you prove that the insurance did not cover, then you had your own expenses going in, Without that, your business cannot operate absolutely deductible. And I would recommend you to deduct that in business. Don't go for casualty deduction on your Schedule A. But of course, if you don't have a business, you will deduct that on Schedule A as a casualty expenses. But if you have a business and that interfered with your business, say you have a daycare business at home, your roof is leaking, and they only reimburse you for 1/3 of it, 2/3 of it you have to pay for yourself, then I would take that into the daycare expenses and calculating the square footage that you use for daycare, then use that percentage to apply to the portion expenses that was not reimbursed by the insurance. Yes.
Thank you. Okay, so I've had several employees called to serve jury duty. Can I deduct the time that I still had to pay their salary? So can I deduct that time?
Such a great question. I think the answer is no. You can deduct their payroll. That's already in the payroll, right? They didn't work, but you still pay them. So that is already a deduction. But I think your question is that can I get that money back somewhere else? I actually don't have an answer. I do not think so, but I will look into that. I really don't have a good answer. There's not a lot of, nobody ever asked me that question before. Yeah. See, I don't know everything, right? A living proof. Yeah, but you can deduct it because you paid payroll on that, right?
Yes. Okay, so let's say appearances are very important in my line of work. I do a lot of entertainment and that sort of thing. Can I deduct cosmetic surgeries and augmentation?
Okay, if you are a actor and an actress in the movie industry, and your appearance becoming a necessity for certain roles, and you want to make yourself look certain way, I believe I don't have a famous actor actress is my client yet. I'm looking forward to that because I have some really good looking clients, but they're not actors and actress. And so we don't know that yet. And but if it is necessary, reasonable for business expense, yes. If you are in that industry, your appearance has become such a important matter for you. Otherwise, you don't have your job, and that is necessary. You can tell by definition that would be deductible.
Awesome. All right. So we know that Valentine's Day is coming up. Can I buy gifts and use that expense as a deduction?
What a tricky question, and very timely too. I know if I say that, yes, it's deductible, everybody's gonna run out of here and go buy flowers for somebody, for some significant of others. Okay, let's put it this way. It's going back to that definition again. Is that necessary and reasonable? So I think Valentine's flowers for your loved ones is not deductible, right? And IRS says that that is just what you want to do. You don't have to buy flowers, you know, for anybody. For your loved one, you can express it without money, right? But if you want to use money to do something and it is not necessary and reasonable for business, then it would not be. And you can say that, well, of course it's necessary and reasonable for business, because if I don't suck up to my spouse and he or she would not work hard on the business, that argument can just be fun for us to talk about, but in front of IRS, it would not work. So let's not use that one. And Valentine's flowers, unless you're doing that to your clients. Is your client and you want to express your, you know, appreciation, and you did something that's your marketing expenses. Okay. And you know, I just saw something on the Facebook this morning. One of the person, her dog died, and so So she informed the dog food supply people saying that my dog died. I no longer need to subscribe to the regular food service. Close my account. And so of course the account is closed, but she received flowers from the food supply company saying that I'm sorry you lose your baby, you lose your dear baby, and this flower is for you. So for that supply company, that flowers, even though it is a flower, not really kind of their business, but it's deductible because it is their business strategy to put client interest ahead of everything else, and to express their condolences to the puppy that passed. So that's a business expense. So same Valentine's flowers, one is deductible, one is not.
That makes sense, Ying. So say that I'm part of a business that we don't, we hire professional services like an accountant or an attorney. Can we deduct those services? Like what if I wanted to hire a community CPA?
Of course. So when you hire professionals to do anything for you, for example, in your business, you hire community CPA for business consultation, then you hire attorneys because you have a client with, you are in certain troubles, and you might even hire a personal coach to coach you how to be a good business person. So all of that is business expense because the focus of that is to do better business, right? Of course, if you say that, well, I'm just sick with my business, so I need mental counseling because I'm mentally sick. I need that kind of help. Then I would say that those are more on the personal side because you are sick, you're mentally sick, your insurance would cover that, and your other expenses would be out of pocket for your personal well-being, like you're as a person you are sick. But if you just want to learn better things for business, I have a business coach who told you that we're going to go climb the mountain, do exercise because that's part of making your business better. Those business coaching expenses is actually deductible.
Awesome. So, okay. So somebody says if they have a nonprofit organization, can they deduct costs for buying gifts to show gratitude for volunteer work, or for buying products to attract more clients or members?
So if you have a nonprofit organization, know that whatever profit you have left over, and it is not taxable, right? The reason we talk about business deduction, because we have income here and we have expenses here, we would have less profit to pay taxes if we deduct all the business expense. So that was the baseline we're talking about, because we want to deduct all the expenses so our profit is less, so we don't end up paying tips to IRS or to the state. Here with nonprofit, none of your profit is not taxable. So first of all, whatever left over in your nonprofit, you carry it over, you don't have to pay taxes on the profit. So now, what are the deductible expenses? By large, those expenses, of course, need to be in line with your nonprofit vision. For example, if your nonprofit is a food bank, then most of your money is spent on food, right? So it's all deductible. Remember, we just talked about food. We say, well, we can only deduct 50%. But because we're not in that mission to provide food, for nonprofit, and whatever you do, as long as the board approves, that's more of a regulation than the specific business requirement of business tax law related to profit organization. So of course you need to spend money to conduct your nonprofit, but more likely you spend money by the board members who approves you to spend money in a certain way. So now come down to this question. And can we deduct cost for buying gift to show gratitude? If the board of directors says that we need to award our volunteers and reimburse them for their mileage driving, though those are expenses, yes, I guess buying gift and what are the gift you're buying, so that's treated as basically reimbursement or payment to the volunteers, right? So of course that's allowed, but remember, every time we deduct something, and you need to know that who is the beneficiary for that, right? If I deduct daycare for me to work, remember I said that it's become part of your W-2, because the beneficiary kind of going back to be yourself, and you need to land that deduction on yourself. Same thing. If you buy gift, depends on what kind of gift that is. If you're gonna buy a $2,000 mirror for people to exercise at home, and that is going to be a taxable benefit for your volunteers. So just be aware of what gift you're giving. But if you reimburse them for their mileage, reimburse them for their spending, and then it's not taxable to the volunteer. And so you also said that buying product to attract more clients or members. So it is almost like you're saying you're preparing a package as gift to give to them, say that, hey, you can come to be my member. So those I consider as a marketing expense. So just like, I join membership, so they send in a mug, they send in, knickknacks and to as a member benefit package. So those are not taxable. They are marketing expense for your outreach. So you can get your members, or you call them customers, to come to the nonprofit.
Okay, thank you, Ying. I think this gives us a really good framework for how we think about deductions. If you have any further questions for Ying, you can email us. I put my email in the chat, Catherine@communitycpa.com. Feel free to send us any further questions that you might have. But let's wrap it up with one final question, Ying. How do I keep track of these expenses, and do I need to show justification for the expenses that I'm planning to deduct?
So a lot of our clients, if the business is small, they don't have to do real accounting for your expenses, and they simply have a folder to save their receipts. The bottom line is you really do have to have receipts. So deduction doesn't mean, oh, it shows up on my bank, it says that that's what that is, shows up on my credit card, it shows what I bought. Those are not acceptable deduction backup by IRS standards, okay? And whether that would change, improve, sure, things will change because the technology is advancing. But for right now, if you get audited and you show a Office Depot expenses of $2,000, IRS do not take your credit card expense, credit card statement, say, okay, that's fine, and this is deductible. No, they want to see receipt. So really, the bottom line is that you have to have receipt for everything you claim. But if you come to our firm and once a year to do taxes, you say, Ying, here's my summary, and I office expense $2,000 and membership $5,000, that's my expense. Your tax preparer are not responsible to say that, oh, show me your membership, show me your Home Depot expense. It is not their job. And they will take the number you give to them and put on the tax return. But if you get audited, you must have them. So if we work with a client on the regular basis, and they're more in front of us, and they do monthly accounting with us, in those cases, we would already requested that at that time. So when we do bank recs, and we'll say, what is this? And you'll say, well, this is the office expense. And we will already told you that please keep everything in 1 month. So this is our monthly statement. The backup is with you. So we're good. So in a lot of ways, just make sure that, in the end, in the very end, you are the one responsible for the receipts. So don't relying on the accountant, don't relying on the tax preparer to know what that is, because it really has to go all the way to the receipt if you get audited. But let's say if you are not getting audited, 3 years later, whatever you said you have, that's what it is, because normally there's a statutory limitation for 3 years tax return. So right now we're in 2021 April. Anything you filed for 2020, in 2020 we filed 2019, right? So 2019 is still open. 2018 is still open. 2017 is still open. 2016 you filed is closed. So even if you have something wrong, you realize right now, oh yeah, I had this $100 income I forgot to report. That $100 income you forgot to report would not come back to you because they closed 2016 tax return already, statutory limitation over. So there is no need to go back to do fix on your tax return. And you only just focus on the 17, 18, 19 right now. Of course, if you are just not wanting to forget it, wanting to change, what if the $100 is my expense? I supposed to get $5 more refund on that, Ying. I want to do that. You don't get refund. The 3 years statute limitation also limit your refund. If you have a refund you didn't claim in 2016, forever expired. You don't get it. So that 3 years statutory limitation is real. It's for everything, including refund. Okay. And I have quite a few people on the screen, but most of you don't have your picture on it. I know Dean is on there. Hi, Dean, and good to see you. I actually have a nickname for him because his name is John. For whatever reason, when I met him the first time, I always call him John, even though his name is Dean. I don't know why I do that. So he had a nickname for John. And hi, Jenny. Good to see you too. Yeah. So good to see you guys. And of course, Ming, yeah, good to see you. Yeah. So I really appreciate you are here. I mean, I always say to my business owner that in business, there's no such thing about, oh, I'm doing good, I'm going to stay where I am. In business, you either scale up because you have to, otherwise you go down. There is no middle ground. So in the quest of scaling up, and you always want to learn. And these kind of, sometimes it is just a determination in your mind. I'm going to give time to this time to learn. Our 3 o'clock on Saturday is always a huge learning time. And we prepare this. We really get ourselves ready to give you the knowledge that you need to have. And I have clients who are actually coming into our session all the time, and then they become a little expert themselves, and they really know a lot. And those are the people that will scale up in business, especially, especially in this kind of time, business changes very fast, and you can easily just get behind. And you also can get ahead a lot faster because you are staying in the trench and you know that the knowledge is there and you learn. So thank you so much for everybody to be here with me today. And we will see you again on Tuesday. On Tuesday, 3 o'clock, I actually do a do-it-yourself employee retention credit again. I had one already and received a lot of internet viewing. People are really circling that videos out there. But there's a new update coming up. So I'm doing an update for do-it-yourself ERC on Tuesday. So spread the word for us so everybody can get into that credit. It's a real money. It is not phony, it is real. You will get part of your 941 taxes back. So join me on Tuesday. Let your friend know. Okay, bye-bye.
Bye, everyone. Thank you for joining today.